Okay, guys. Are we on? Are we off? It's hard to tell. I don't know. Anyway,
You're watching SBA Today. With all the latest news, stories, and advice, here are your hosts, Paul Long and Tonya Mazurek.
hello, and welcome to SBA Today. It is the week of August 12th, and this is brought to you by Res Title, our title experts. And today we're going to have a special guest on here because actually I'm going to bring her on before I tell you the rest. But as many of you may not know, I made a move, right? And I started with a new company last week. That new company is Community Bank and Trust. And yes, I have a special guest on today. So let's go ahead and bring her on. Look at who it is. It is Miss Stephanie Dunn. She is the Executive Vice President, Chief SBA Revenue Officer, and my direct report that brought me in over at Community Bank and Trust. Introduce yourself, Stephanie.
Thank you for having me. Very excited. Stephanie Dunn, EVP, Community Bank and Trust. Have been in the SBA space for, going on 20, 25 years. So been around, excited to be here, thrilled to continue to grow and learn. And so happy to be on your show. I'm a big fan.
Well, thank you. I'm a big fan of you. And hey, you have a show out there too. You're welcome to go ahead and just pitch it.
Oh yeah, we do. We have our Lords of Lending with myself, Shane Pearson, and Brian Congelari, who have worked together for 15 plus years. So we've been together as a team for many, many years. And we figured, you know what, let's put together a show for entrepreneurs across the country and just try to add some value.
Absolutely. And you know what, guys, here's the thing. We love pitching each other on here, and we love it in general because we are all out there to help others in the industry. That's exactly what this is all about. And the more we all come together and we, I guess, play off of each other's, if you will, I think the more the business owners out there and borrowers win. So anyway, so we're going to get into more with Stephanie too at further into the program, because we're going to talk a little bit more about why I came over to the bank, a little bit more about my bank now, our new bank, and we're also going to talk about why deals fail, right? What are some reasons that make deals fail, which is going to be pretty important. But first, I'm going to go ahead and give you a little bit of the headline news for the week. So we'll jump right in. The executive order, y'all have heard it, right? There's an executive order from Trump, right, that targets debanking. Oh, it's a pretty big deal, right? President Trump issued an executive order titled Guaranteeing Fair Banking for All Americans on August 7th, 2025. Now, with this, the order targets debanking practices where financial institutions deny or terminate services based on political views, religious beliefs, or industry affiliation. They're not supposed to do that. Well, okay, I guess it was told to do that to a degree or something along those lines, right? And now he's kind of backtracking and saying, no, that is not going to be acceptable anymore. The order directs the SBA and other federal banking regulators to ensure fair access to banking services. It includes reviewing past debanking actions and potentially taking remedial action. E.g., examples, fines, consent decrees, etc., against institutions with policies that encourage such practices. The order also mandates that the SBA require participating lenders to make reasonable efforts to reinstate clients previously denied services due to this debanking and unlawful debanking. This could lead to increased scrutiny for banks. Okay, that's all of us, guys. So what happens to another bank? Guess what? It kind of crosses over because we all kind of are playing in the same playground. So if others are having issues, you think that it's not going to come down the lines? Absolutely, even if your bank wasn't one that did it. Anyway, so it could lead to increased scrutiny for banks regarding their client relationships and potential requirements to reevaluate past decisions. Okie dokie. That is it's coming down the line, guys. Anyway, disaster relief disbursements. The SBA disbursed over $1.5 million to Texas flood victims and approved over $10.1 million in relief to assist Kentucky's rebuilding efforts following severe storms and tornadoes in the past week. Thank you. I mean, come on, guys. SBA does some really great things as well. Updates to SBA franchise directory. We all know that already occurred. It started as of August 1st, 2025. SBA reinstated and streamlined the franchise directory, a resource for lenders to determine business eligibility for SBA loans. Franchisors and distributors. All right. You now need to sign one master certification with the SBA, replacing the need for individual loan applicants to include an SBA franchise addendum. So that's going to make it a little bit easier, guys. All right. Potential increase in 7A loan limits. I like that. Do you like that? I don't know. I like that. Anyway, the SBA is reportedly considering raising the 7A loan limit. Considering. Don't forget that word, right? Considering raising the 7A loan limit, possibly to $7.5 million or even $10 million for industrial businesses. This potential increase could be advantageous for businesses seeking larger loans for expansion or other substantial subjects. We'll actually talk a little bit about that too. I'll ask Stephanie about that at the end as well, what her thoughts are in that one. It's important for banks and borrowers to stay updated on these developments and any subsequent changes to SBA requirements and regulations and procedures to ensure compliance and make informed decisions regarding loan applications and management. All right. Well, there you go. That's a biggie. And I don't know. Do we have anything coming down the line? Hello, Miss Madison? No? All right. So we are going to get into bringing Stephanie back. Stephanie, I was going to do like some music and be like, oh, this is how we do it. Yeah, I can just make up my own. Come on, do it. Oh, no, I can't hear you. Uh-oh. Oh, there you are.
Oh, okay. Yeah, I can hear you.
Okay, good. So anyway, so Stephanie, let's talk before we get into some of the different things that we were going to talk about as far as what makes, deals fail, across the board. Let's talk a little bit about the bank that I just came into, talk about why you came over. And then I'm going to give my reasons. I want everybody out there to know kind of my reasons for making a move, at least some of them. So anyway, talk a little bit about what we do.
All right. Well, the exciting news is Community Bank and Trust and Community Bank Holdings is a team of veterans. We've been in the business for years and years and years, and we've all come together now and under one big holding company. And we just do what we have always done, which is provide value to small business owners across the country through the SBA program.
Right.
So we provide SBA 7A loans and USDA loans. We acquired Thomas USAF about a year ago or 9 months ago. So we're all under the same roof now. And we've just been in this space together for years and years and years. So it's fun it's almost like we're putting the band back together. Yeah. And that's why you are such a natural fit for us, because you're also an industry vet. So we're like the Navy SEALs of SBA, let's call it, right? So we've all come together under one roof, and it's just really exciting because everyone on the team has been in the space a long time, and we just jive really well.
Right. And I agree. And that's exactly why I made the move, right? I mean, the group that they have brought together over here, this team between Community Bank and Trust, as well as the Phoenix Lender Services, the group that they have brought together, talk about top-notch industry experience. So I am looking so forward to not only bringing my experience to the team, right, but learning, because we all can learn. Anybody that thinks that they get to a point that they know it all, they're the ones that's going to fail in this industry. It's no different than entrepreneurs, right? When you're an entrepreneur, you get to a point, right, or a CEO or anybody that gets to the point that they think they no longer can learn something from those beneath them. Now, y'all all know I'm a round table type person, right? That's the ones that I think miss the boat. And so I'm so excited to be over here and all of us bringing our knowledge together to offer to the industry in general and to borrowers out there. So I'm very excited. And Stephanie, thank you for bringing me over, and thank you for putting your trust behind me. I'm so excited.
Well, and likewise, thank you for trusting us. I mean, it's a big move, right? Because look, we just talked about this a couple of weeks ago with the colleagues here, is we spend more time with our colleagues at work sometimes than we do with our own family. So it's so important that we love and respect each other, and that we enjoy what we do too. When you enjoy what you do and you're happy every day, the borrowers feel that.
100%. And the humor, right? So I'm just going to give you guys a little bit of a this morning thing, right? So Stephanie calls me earlier this morning, and now she's on East Coast time. I'm on Mountain Standard Time. So we already knew that it was coming, right? But she teams me, and I had some other things go on this morning. So I'm sitting there in a robe. My hair is not done yet. I've got half my makeup on. I'm in a robe, whatever. And she does it via video on Teams. And I'm like, I answer, but I don't answer with video. And then all of a sudden I'm like, whatever. So I just get on and I look like I look. And the first thing she's like, oh, I have that same robe. It was awesome. I mean, you got to be able to have some fun, guys, and know that, crossover, personal and business crosses over into each other. And anybody that thinks it doesn't, they have their own set of issues. So regardless, let's get into this. Reasons an SBA loan can be turned down and likely should be. Well, sometimes likely should be, let's just say. Let's go ahead and talk about cash flow first of an existing business. What are your thoughts on that, Miss Stephanie?
Well, I mean, that's number one, right? Repayment ability. Is this a viable business? Can they afford a mortgage? Can it support the price? I know that's always the big one, right? Between buyer and seller is what is the cash flow ability of the business? So that's number one, right? That's a quick back of a napkin. Can you afford a mortgage in this price?
Right. Yeah, no, cash flow is obvious. I mean, everybody out there knows this, right? So, I mean, if you're doing expansions, anything like that, we're looking at that historical cash flow in general. We need to know that you knew what you were doing to begin with before you move forward for what you're doing. And if it's projection-based, peeps, okay. Have you ever had this happen? I know you have. Everybody has, I'm sure. But you get the projections for the business, and I think they forget they're talking to an SBA lender, and they're giving you the investment deck.
Yeah. Well, or they show you the historical cash flow and it does not cash flow. And they say, well, I'm going to run it completely different. So here are the projections. So there has to be an understanding there of, okay, this is what it's done historically. Right. Here's what it's going to do in the future. But why the drastic jump? Walk me through that. Right. Walk me through what you're going to be doing so differently that will change this cash flow that dramatically.
Well, and that's so true because it's all about the assumptions behind. And I think people forget that, right? Whenever these borrowers come in or brokers or whomever, right? I get the numbers, right? We can read numbers. Everybody's reading numbers, but we're going to look at those numbers. And we want to know, people, where are the numbers coming from and why? Give us the assumptions behind it and make dang sure that they make sense. Otherwise, that's, if we're not telling you up front as loan officers, one, we're not doing our job, because as soon as it gets to the back end, that's what's coming down the line.
Mm-hmm. You know what an interesting exercise, I don't know if you've ever done this, is I revisit a year later to see if that business actually hit the projections they told me they were going to hit. And it's a fun conversation actually with the owner to talk about, hey, how did it end up working out? Did you hit those projections? I have to tell you, I think it's 50-50.
I was just going to say, what is the percentage? Because I don't know that I would even think it was 50-50.
I know. About 50% of the time they hit those projections.
Interesting.
So, well, I mean, look, entrepreneurs are hopeful, right? That's why we get into business, right? We are all entrepreneurial hopefuls, right? And so we think that we're going to come out of the gates doing X, and what does it end up doing in a year from now? So it is a great exercise because I use that information when I talk to new borrowers about projections.
I love that. Yeah, I love that. And you're kind of, you're looking at what they're doing, so you can sometimes potentially, even in that moment, help them if something's not going the direction they thought it was going to go, versus it getting to a point that it's already downhill.
Yes, exactly. Yeah.
Yeah.
This is where the value comes in. You and I talked about this earlier today, is like the real value comes from, again, we're not old, we're experienced, right?
Oh, no. She said earlier, she's like, I was like, don't you, no, we aren't. These are experience lines. Thank you very much.
Yes, that's what we're going to call those. So that's the value we get to add in our conversations with small business owners is, hey, look, I've been doing this for a really long time. Trust me when I tell you, I've seen a lot of projections in the years that we've been doing this. Let's dig in together.
100%. And you know what, that kind of bleeds right into the next one I wanted to talk about, which is borrowers in general and the no experience or borrowers with no experience in the industry, questionable transferable skills, and no knowledgeable team around them. So my thoughts on that, right, is oftentimes it's not, yes, we're looking at the borrower. We want to know that they've got something behind what they're looking to do. And if they don't, or if it's it's a stretch, let's say, right? I want to know that they have created a team that makes sense behind them, that is going to take them to that next level. And I think so often we either will look at the borrower and we're going to say yay or nay based on only strictly that, but we're not paying attention to the team that they've built and or the team they haven't built. And I think we need to look at both. What do you think?
100%, absolutely. And the team they're inheriting. When you buy a business, you're walking into an existing family, right? So you're coming in as a step parent, you're coming into an existing team, and you have to understand, one thing that I think about is, all right, what is your skill set as an owner to walk into this existing business and be able to manage an inherited team?
Right.
What is your communication style, management style, and in addition to, all of the business skills that are required from a daily operational perspective, right? So I like to, and this is hard, right? It's the catch-22. I like to lend money to experienced operators who've run this type of business before. But there's that catch-22, when I was starting my career, it's like, well, how do I lend money to an experienced operator who is trying to get into the business so they don't necessarily have that direct experience?
Right.
So
oh, go ahead. I was going to say, but that can go two directions. So the reason I bring it up, so what I see is oftentimes you can have somebody that's, let's say they've been in the industry, they ran it, who knows what those numbers look like, and they're going into another group, they're buying, they're acquiring. There's still something with that group that's completely different than what this party knew, and going into a new team, it's almost like a new manager or a new employee. So we can talk about me, for goodness sake. I'm coming into a new bank environment. Now, do I know SBA? Absolutely. Do I know how to work with borrowers? For sure. Does that mean I know specifically the route and the people and the how the team works together and whatnot at the new place I'm at? No. So what do? You don't go in and immediately just throw your own stuff out there. You go in, find out how you like it. Like I was telling you, Stephanie, I'm calling the credit officers. I'm calling the, underwriters. I'm calling others to say, hey, how do you like it done? Because I don't mind up front changing some of the ways that I do mine in order to fit with an already built team. Many want to go in and they want to immediately, like, let's say new borrowers, they don't take time to see how everybody works together and how things are done. And they just want to go in and immediately start changing things. And I think that's a disservice, honestly.
And that is this is where this comes in. Experience is key.
Yeah.
So when we're assessing small business entrepreneurs or business owners and can they come in and run the business, what is their experience doing this before?
100%.
Yeah.
Okay, so let's go to the one that everybody loves, right? Which is poor credit. And not only poor credit of the business, because that's pretty easy to find out, and then where that one's going to go, but poor credit of the business itself, but also, even more importantly, poor credit or poor money management of the borrower.
That is such a subjective topic, right? Because when you think about it, and it varies so much. It depends on what credit bureau you pull and what version it is.
Right.
And then, how many times have you had a borrower apply and say, look, I pulled my score and I have a 700, so I'm good to go, right? And then you dig into the credit report. Mm-hmm. It's not necessarily the score. It's what's behind the score.
100%.
What is their payment history? And then also judgments, tax liens, past due on child support, all those things. Guess what? You could have a 700 and have all those things. 100%. And that's a reflection of, why are you not keeping up with these liabilities and these payments? Right. And so, I do really dig into personal credit. And I tell everyone, please know your credit before you send it to me so that there are no surprises.
I really like it when they pull their own. And I have a tendency to tell them to say, they can go out without getting a soft pull, without getting a hard pull. They can go and check their own at freecreditreport.com and or Credit Karma. And they can find out, because what I tell them, again, like you, it's not just the number. The number is just a single blip, right? There's way more that goes into that number, because I want to know what is your debt? What's it going to? What's going on? Have you had 30-day late pays? Have you had 90? Are they recent? All these fun things come into play. So people, and you know what? Here's the other thing. If let's say there is a blip on credit, and it happens, right? People have issues and things drop. They could have a medical. They could have had to move across. They've lost their job and gotten a new one or something. There are things that happen, and we are here to listen about that to see if it makes sense. So it's not just a go away, right? If something sticky or challenging or that number doesn't quite come back like it should, we know that there's things that happen in life. Shoot, I've had it happen to me across the board in different things. So, anyway.
Absolutely.
Okay. Construction project. Now I'm so excited because I came over here and I can do construction again because my previous bank took away construction and I like construction. Anyway, construction projects with low excess cash, contractors with little experience, unfounded or guesstimate estimates. Say that like 4 times in a row. Guesstimate, estimate, guesstimate, estimate, guesstimate. Anyway, what do you think about it?
I love construction as well. I've always worked for a lender that had that ability, thank God, right? Because you know what small business in America doesn't need some type of improvement? I mean,
tell me how often does somebody buy real estate and they don't have some sort of tenant improvement to put into it after they buy it? Come on.
Exactly. Right. So I've always been in an environment where I could offer multi-draws construction. Yes. Now, I'm not going to lie, ground up construction, I've done a ton of that. Big ground up projects. It's a lot.
It's hard.
Be prepared. Tell yourself, hunker down. It's going to take some time. It's going to be a lot of work. Ground up construction is a lot of work and a lot of time. But guess what? I mean, this is America, right? This whole country has been built from the ground up. So I like those as well because I love new projects and I'm very active in the construction space. But yes, key is have close liquidity, build in contingency, have your interest reserve in place. Have it experienced GC is key.
Oh my God.
And you don't just say, all right, we're good to go. We closed our loan. Now you work with the GC. The owner has to be actively involved daily with, is the contractor on time?
Yes.
On budget? It's every day, on time, on budget, on time, on budget, every day in and day out. Because a lot of times the borrowers think the bank's managing it with the GC. Well, I'm not going to be the GC on site working with the workers, right?
Yeah.
So this is one where it takes a village.
It does take a village, and I totally agree with that. The whole excess cash and all that. Many come in and they're like, yeah, but I've got just the minimum and stuff like that. And in so many ways, even if we're not requiring it as a bank, what I would tell anybody out there that's doing construction, expect that it's going to cost more than what you think it's going to cost, regardless if we're only doing a 10%, 10% equity injection, perhaps, or a 10% interest reserve, or a 10, any of that. Construction reserve, any of that fun stuff. Plan that it's going to be more than that, because it is. And especially lately, I mean, oh my God, the last few years, shoot, I'd be like 30% extra. Have money, because things always come out of the woodworks. Things that you don't know, things the bank doesn't know, things the contractor doesn't have any idea. I mean, anything can happen. If you don't have it, you get stuck in the middle, and then what?
Yeah. And you know what I would always say, one little thing to keep in the back of your mind is, if you pick a GC, you go with the GC, have a backup plan just in case, with another GC that you've already vetted that you could call should the first one back out or not be able to deliver. And it's not just on budget, it's on time.
I was going to say, yes.
On time. I mean, I have to tell you, I think probably just about every single construction project I've ever done has had some type of a delay.
Every single one I've done has had a delay. Every single one I have done has had some sort of delay. And it might not be the construction piece of it. It might be bank related, permit related, especially permit related. But there's a whole, sorry about that. But there's always something that comes out of the woodworks with any construction deal. You got to be ready and prepared. What was the other I was going to say? Oh, when you're getting estimates, people, it's not always the lowest estimate that makes the most sense. Like Stephanie just said, I mean, it could be the timing, it could be what they put in there, the knowledge of that contractor in the type of construction that you're doing. It's also daggum valid. It's not just about the bottom line number, because that it's not going to be. It's not going to be that anyway. It never is.
Yeah,
Anyway.
absolutely. Good point.
Yes. Okay. So bad. Okay. And I hate to say it this way, and I don't really mean it bad loan officers, but meaning loan officers on the front end that speak too soon or just want the deal off the street to try, or bad brokers spinning a deal up front to push push questionable borrowers through, unfamiliar SBA shops, or those dabbling in SBA, even though they're really conventional, but periodically they want to slap a guarantee on something, right? So let's talk about some of those that kind of create problems in the industry.
I'm of the opinion, everything I do in life, anything I do, if I'm looking for a good accountant to file my taxes, or if I'm looking for, a good podiatrist, I'm going to look for someone who's been doing it a long time, and I could find reviews and information on having done it a long time. So
Right.
I would say this: when you're out there looking for a loan for a very specialized niche, right? If you're in a niche industry, niche business, niche market, whatever it is, franchise concept,
Right.
the first question is, how many of these have you done?
Yeah.
And guess what? Even if they say, oh yeah, we've done a lot of these before, all the data is public now. You can find out what bank has done what in what space. And I would say, do your homework, do your research, regardless of what the person tells you online or on the phone, or you're right, whoever it is you're talking to, back it up with, all right, let me see the type of volume this bank or this lender has done in this type of space, because I want to make sure I'm really talking to someone who's done many of these before.
And ask questions that they have to answer, because what I have seen oftentimes, right, is, let's say it's new BDOs that get in, and everybody needs to start somewhere. I had to start somewhere. We all do, right? But are they getting their people behind them to give advice and to lead and guide them, so that they're not leading, guiding you down a daggum rabbit hole? Because I've seen that too many times. Or, just speaking out of turn because they just really don't know. It is okay in this industry, and it is actually advisable to say, I don't know, I'll get back to you. Like, I had somebody call. So I didn't quite know yet, Stephanie, how we worked with our USDA here, right? And I had somebody reach out, and we're talking USDA, and there were a couple of questions. It isn't, my specialty is not USDA. Now, do I know enough to be dangerous? Yes. But do I know also enough to know what I don't know and be okay telling somebody? 100%. And that's exactly what I did. And then I reached out to specific USDA of, hey, when this comes, how does this work? So I think people are so worried that they're going to look bad in somebody's eyes if they say, I don't know, or if they say, let me get back to you, or something like that. Now, it shouldn't be all the time. Do your homework. But absolutely, I think that's the best way to go, is give people honest, direct, transparent, authentic, be that up front. Don't just try to push them through because you're hopeful, but you don't really know, because that hope on your end or turns into no hope on their end, because they're going to end up losing it via time or denials or whatever. So anyway.
Yeah, absolutely. Everyone who comes to us, comes to us because they are trusting that we are going to give them the best advice.
Yes.
And our true, I would say, service is to do just that. And so I'm the first, and you're right, I started out too very young and didn't know anything. And my responsibility was to find the best for them.
Yes.
When it wasn't me, I will find the best person for you. And so I think once you start to realize that you don't have to hold on so tight to the vest, and you can share with other veterans in the business who will share, it will come back tenfold, right? So when I am not certain about an industry or a market, I'm the first one to say, I will find you the best person in this space, and they're going to take amazing care of you, and I'm going to make sure of it, and I'll stay in the loop. But that's how we grow, right? Strength in numbers.
Yep. 100%. I just love that. I mean, there's so many more things I could go into. I think we've basically run out of time. So I'm going to give you a sec, right? To, just one, I want to thank you for coming on. I want to thank you for giving me your time. I want to thank you for so many things that, I already have behind the scenes, but to let everybody know, I mean, I think Stephanie is just, excuse my language, a badass in the daggum industry. So you can bleep that, Madison. But anyway, and I really, really enjoy and the heck out of the team, the whole entire team here. But I really, really had a connection with Stephanie, and somebody that's kind of got that same desire, like that karmic belief in a lot of ways of how we treat others is what comes back to us. And that is in the role, that is who you work with, that is how she is with us, that are under her, as well as with her borrowers. And I just think that's amazing. But why don't you give us a little ending for being on the show, or what you'd like us to all know?
Well, thank you so much for having me. You are just absolutely fantastic. And like I said, you're just a true leader in this space. And I think the more that we can all collaborate, I think it just benefits the whole business and the whole industry and our small business economy. But yeah, I share your passion. I think there are a lot of us out there that, look, we could be off doing whatever it is we would want to do with our careers, but we choose to be here because we're passionate about our small business economy. And all we owe to ourselves and to this country is just to be authentic. If we're ourselves and try as hard as we can every day to be our best versions and not be perfect, but just also provide enough gratitude, I think we could all just do a really good job, and we're doing it. So I think we just keep on keeping on.
I love it. I think that's amazing. So thank you for joining us, Stephanie. It's been awesome. And to the rest of you guys, you know that we are here on Tuesday mornings live. I'll go ahead and say 11 a.m. Eastern Standard Time. I love to say 9 a.m. Mountain Standard Time, just depending on where I'm at. Anyway, and we are here to bring you the news and obviously bring beautiful guests and whatnot that can share and expand our SBA experience. Let's see. Yeah, go ahead and check out any of our latest shows too. The Art of SBA Lending and the BDO Show is our family of podcasts. We would love for you to check them out. They are amazing. Ray has been chatting it up all morning as well. Anyway, if you like what you do, reach out with questions on LinkedIn to Paul or I on our LinkedIn pages, and rise up with your big bad selves. We think you're awesome. So we'll see you next week. See ya.